Hello, everybody, and welcome. As we like to do every week, I like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, kind of the same story every week, but it's been a bit of a little bit more exciting, I guess, over the last week. For the most part, as you've seen, for a month or two leading up to kind of the last up until February, things were kind of shooting straight upwards. In the last week and a half or so, it's kind of been a lot more choppy. You can see it's kind of like stabilized around here, kind of really going nowhere, up and down, but really in the end, not much difference. And again, all the indices are going to look fairly similar. This is the S&P 500. This is the NASDAQ, looks fairly similar. The IWM looks a little different, but for the most part, fairly stable. So what are we going to trade today? Well, like I said, at the beginning of the year, I always like to put trades on in all the major indices. And I learned this a while back, and maybe you can use it as well. And I've turned it into kind of an acronym, I guess you want to call it. So when we trade stuff, we don't like to be all in the same sector. Meaning, let's say if it's technology stocks, we don't like to make 10 trades in technology stocks. Even if they're different stocks, technology stocks tend to move together. Meaning, like if you do a trade in Facebook and Google and Amazon and things like that, even though they're totally different stocks and companies, the tech sector as a whole tends to move kind of together. So we're not diversifying. So a long time ago I learned this, and obviously things change over the years. Things aren't quite as, stagnant. They don't always follow the same routine. But for the most part, as far as diversity goes, I've turned it into this acronym called BOGES. So bonds, oil, this is gold, euro, and SPY, which is the S&P 500. So for the most part, these are supposed to be diversified. And obviously it doesn't always work that way, but technically speaking, they don't have a lot of correlation between each other. So if you have trades in these 5 different things, for the most part, you can tend to see them move kind of all over the place, which means some are going to be winners at some time, some are going to be losers, but hopefully they kind of bounce back and forth. Anyways, that being said, we made a trade in SPY last week, so I'm going to start to put trades on in all these, what I call BOGES, over the next few weeks. So we did SPY already, right? So we did that one last week. So we're just going to move right on now into bonds and make a trade there. Bonds would be TLT. Here's the chart, and you can see again it's kind of been on a wild ride. It's kind of on a downtrend, but kind of in this range. So if we go over to the trade page, I'm going to go here in the 61-day cycle because tomorrow that'll be 60, which just makes it inside our rules. And I've already set the trade up. So the stock is at 102. So I'm going to go $6 up on the call side, $6 down on the put side, and then buy the call on the put, turn this into a $2 wide Iron Condor. And as you know, if I collect at least 66 cents or more on this trade, that's a viable trade. So again, going back to the BOGES thing, again, BOGES, bonds, oil, gold, euro, SPY are supposed to be not very correlated. So if you trade in each of these sectors, it should bounce around on its own a lot more than just all tech stocks or that kind of thing. So if the market stays right here tomorrow, we're going to go to TLT. We're going to go $6 up, $6 down, create a $2 wide Iron Condor. And again, as long as we collect 66 cents or more, this will be a viable trade for the bonds. Everybody, and welcome to an opportunity I don't think you're going to want to pass up. Now, the point of all my courses is to give you the knowledge base and the confidence to learn to trade on your own, and hopefully one day generate an income stream on your own through the options market. But the best way I've found to do that is to allow you to trade side by side with me. So the way you do that is if you go to sharpertrades.com and you go to the products section, 2 alerts will show up, the basic alert and the pro alert. Now the alert itself is the same for both. The only difference between these two is the pro will give you access to every course I've ever made, many of which aren't available anywhere else. Now the prices, if you were to do it right now, would be $49 a month and $99 a month. But I'm so intent on getting you up and running as quickly as possible that if you go now to sharpertrades.com and you type in this code, you will get it for $1 for the first month for the basic alert. and you can cancel at any time. So if you decide you don't like it after the first month, go ahead and cancel. If you like the alert and find value in it, from month 2 onwards, it'll click into $49 a month. Now the alert itself will send out 2 to 3 alerts per week, trades in real time, and they'll also send out all the alerts as far as managing the trades for the best possible profit opportunities. Again, you'll get 2 to 3 real-time trades per week, and any trades that are managed correctly for profits, you'll get those alerts in real time as well. So I really believe there's no better way to get up in trading as quickly and confidently as possible, beyond sitting next to me essentially and watching me trade and trading alongside me if you like. And again, I'm so intent on getting you there that I'm willing to give it to you for $1 for the first month to make sure you're comfortable with it. And if you're not, again, you can cancel at any time. So please jump on this opportunity. I really believe it'll get you up and trading as quickly and confidently as possible.